Hey, good morning, everybody. Welcome to Wednesday, March 27th. Hey, sorry we missed you yesterday. We had a little technical difficulty on the volume. We had video, but we didn't have any sound. So we regrouping and getting that put together today. So hey, we got a few things to talk about today. Some things that came in yesterday after we talked with Dave. So Dave will be with us in just a few minutes. Hang tight.
It is 8:40 now, 20 before 9. Time to check in on our money and find out what's going on Wall Street. Phillip Statler from the offices of Statler Financial Services is here. And we kind of got cut off short because I didn't realize American was running out. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. It's hump day, halfway through the week, so looking good.
Absolutely. The biggest news item that I had on Wall Street was a real major one. The burger chain Fat Burger is going to rename themselves Skinny Burger. Now, how can the world be anything but a better place after a headline like that, right?
Yeah, exactly. I mean, what's the deal? Is a skinny burger going to be better than the fat burger? I mean, I
Well, all
guess
you got to
that
do
it's bad
is just
PR,
change.
I guess.
Yeah, change the name. Everything works. Actually, that's the chain that cooked up a burger without a bun. There are two patties of beef instead of a bun with the condiments in between it, and they call that their skinny burgers. So they're changing the name of the whole darn chain because, well, nobody wants to eat a fat burger anymore. We'll just let it sit at that. They're rebranding themselves, and I thought it was funny. Hey, yeah, two big publicly traded home construction companies reported after the close last night, and the market seems to like what they heard after thinking about it a minute.
Well, they did. We had a couple stocks come out. We had Lennar Homes and KB Homes, two of the big guys come out. Lennar missed all the way around. Really, they missed on earnings per share by a penny a share. They missed on revenue. However, they've seen a pretty good jump in new orders. The new orders are up 24%, and they've had a 30% increase in deliveries. So I guess because of that, their stock's trading up this morning a little over 2%. So even on bad news for them, their I guess outlook's good enough that people are deciding to buy some.
Kind of hits that rule of thumb that we were talking about the other day. Guidance kind of trumps everything else, doesn't it?
Yeah, a lot of times it does. And then we had KB Homes, another big national home builder. They did come in and beat by 5 cents a share. Revenue did fall a little short, though. They've had to, I guess, their average selling prices declined a little bit there. But other than that, they swung to a profit compared to a year ago. They're trading up about the same, about a little over 2.5% this morning.
Yeah, I see them both on my winners list this morning. It's almost like the market's grasping at straws, looking for any good news they can find in the housing industry, and a couple of companies surviving in the publicly traded market and even giving decent guidance. I mean, that's enough to cause a party just because it's a straw that we can grab at on the housing market.
Yeah, I think so. I mean, I think we're looking for anything when it comes to housing and what that may look like. Talking about housing, Dave, after you and I talked yesterday, there were some housing numbers that did come out. Let me see if I can pull those up real quick here. New starts. We had housing starts were a miss. They were down. They missed by almost 5%. And then building permits missed but just a tad. They were down less than 1/4%. So that really kind of makes you wonder. Well, the market's really finished up in pretty good shape yesterday, but not all the news was good yesterday.
That kind of adds credence to my notion that with KB and Lennar, they're grasping at straws. Hey, there's some good news. Let's buy on it. The other item that we had as far as companies reporting was Paychex. They're the other big payroll company. We talk about ADP every month because they issue the private sector employment projection. Paychex had a halfway decent quarter, modest beats on both their revenue and on their earnings. So they're a beneficiary this morning, although nobody's really excited about it, I gather.
Yeah, no, I mean, they're really and truly, I mean, they're trading up in the green, but I mean, it's minuscule. It's, less than 1/4 of a point up. So, it's even though they beat and they had some good numbers and even their projections are looking good, they're not getting much respect in the early morning trading anyway.
Understood. Yeah, you get to good news, bad news stories down the line all the time. Under normal circumstances, seeing our imports decrease and seeing our balance of payments improve a little bit, we consider good news, except it imposes on the notion as to China's economy slowing down. So the big macro news this morning was a decrease in our imported goods relative to our trade deficit, and we're not happy to hear that either this morning, are we?
No, we're really not. That's gonna be the issue when we look at some of the different trade things that come up because of the tariffs and stuff. So, another number that we had yesterday, Dave, that came in after you and I talked was the consumer confidence number.
Oh, I missed that. What was it?
It was down too. It was down 6%, 6.3% from what it was expected to be. So really, it makes you wonder why the markets ended up yesterday when a lot of the macro news was not good yesterday.
It sounds like the consumer confidence. It sounds like the talking heads are finally convincing the American consumer that things are good, but they aren't as good as we hoped. So confidence is on its way down. It's still positive, though, isn't it?
Oh yeah. It's still positive. It's just not as positive.
Understood. One other little bit of tidbit as far as publicly traded companies that came out this morning. Southwest Airlines, with that little kerfuffle they had yesterday with an engine failure on a 737 they were transporting over to California to get it repaired. They're now saying that all the news about the 737 MAX groundings are hurting ticket sales. So when we start hearing from the other airlines talking about guidance, I'm kind of a little bit nervous about what we're going to hear there. Too much publicity about airplane difficulties doesn't help the travel industry one tiny little bit.
No, it really doesn't, Dave. You're so right there, and it's hurting Southwest this morning. They're down about a little over 1%, and then Boeing still having some issues in terms of having to go before Congress, making some software changes. But they're down. They're actually up. I'm sorry, they were down earlier. They're up about 1/4 point right now.
Dead cat bounce.
Exactly.
I still remain. Boeing has always been just masterful at handling public relations, and this one, it's almost like they took their 7th grade kids and let them make it an internship project. I mean, the company was offering an at-cost upgrade for a system that they knew had an occasional flaw in it, and they were trying to charge for it. And now they're turning around and saying, oh, okay, we'll give you the upgrade for free after we killed 300-odd people with an airplane with a fixable but malfunctioning guidance system. You got to wonder what's wrong with those people this year.
Well, yeah, it's bottom line. That drives a lot of decisions in the corporate world. So, hey, the other one I have, it's probably a big winner. You don't have it on your list, but Shoe Carnival.
Oh, yes.
A shoe store that's, in a lot of malls and stuff, but they had a great quarter. They beat by 5 cents. Revenue was above analyst forecast, and their same store sales were up 4.7% this last quarter. And they're trading up. They're getting close to 20%. It's up 19.5% right now.
Wow. You think that might be fallout from the Payless bankruptcy and folks are going to the store, they know they're going to be there?
Well, that could be. That's a good point, Dave. I hadn't thought about that.
Might be a piece of it anyway, but it's good to see one of the retail brick and mortar companies doing well. I'd asked you before, and we didn't really talk much about it before we went on the air. The big one on my winner list this morning, I didn't have Shoe Carnival, but Wellmark Health Plan, one of the big insurance companies, is going up like a skyrocket. I understand that it's in an acquisition mode, huh?
Well, yeah, WellCare Health Plans is getting bought, has agreed to be bought by Centini for cash and stock at $305 a share, which is a pretty big number for them.
It's a big premium over what they're trading for because I got them at $260 this morning, so they've got some headroom to go, don't they?
Yeah, they really do.
Understood. Setting the table for the morning off of the mishmash of information because it kind of goes both ways today. Yesterday was an up day, and as you say, Phillip, there really wasn't a reason for it, but it was. Dow was up a little over 0.5%, up 141 points. NASDAQ almost 0.75%, up 53.9. And you and I were talking about a resistance level on the Standard & Poor's of around 2,800. We went up by 20 points yesterday, so we're up to 28.18 and a few pennies today. So we even have some headroom over that resistance level. 45 minutes before we open this morning, are we going to stay above that resistance level today?
Well, I will tell you, Dave, it's been interesting watching it this morning because my first look, we were in the red. Not big, but we're still in the red quite a bit. And we have made a flop now into the green. And so, again, pretty much even, but the Dow's up $10. The S&P 500 is up $1.25, and the NASDAQ's up 11. Gold and silver continuing to fall just a tad. Gold's at $1,320 an ounce, and silver's at $15.36 an ounce. And crude oil is bumping its nose again on $60 a barrel, $59.82 a barrel.
Well, poo on that. I've been watching the interest yield curves and whatnot. They're kind of falling a little bit more into line. 3-month Treasury bills are still a little bit nervous. Is at 2.39%. 10-year is at 2.4. So one of the terms that I'm seeing one of my tip sheets using, yield curve fatigue, is starting to get in there because those interest rates are getting dangerously close to each other. World market, we got a mixed bag over in Asia. Japan was off. The Chinese market's up this morning. Europe is mixed this morning as well with their own internal issues. Phillip, somebody want to figure out how to make all this work for a retirement for me and my family. How would I find you on the phone?
David, give us a call at 382-0037. Follow us online or our website at statlerfinancial.com. Follow us on Facebook at Statler Financial Services. Like our page there. You know, we repost this morning's show there, and we're getting ready to start putting out our weekly show there too here in a couple weeks or so. So a great place for some information there. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730.
NewsTalk730am.com for the streaming as well. We've been banging on that till we're blue in the face. Boss bought a bunch of new bandwidth, so we're in good shape.
Well, that's good, man. I really appreciate that too. It's great listening, folks. If you're not around, or if your AM signal just gets a little bit fuzzy, switch on to the streaming, and it sounds really good.
Thank you so much, sir. And we'll catch you tomorrow. Have a good day, all right?
All right, thanks, man. Talk to you then. Hey, thanks for joining us today. I hope you found this show interesting and got some little tidbits out of it. Hey, if you're getting close to retirement, click on the link above. Schedule an appointment, phone call, appointment, either one. Hey, if you're 5 years out from retirement, now's the time. Or if you've already retired, it's never too late to get started. So give us a call. We'd love to sit down with you and just see where you are when it comes to your retirement planning. Have a great day. I hope you'll tune in tomorrow.